Right now, there's something in the stock market almost everyone is overlooking, and that's exactly why it's worth paying attention. The people who notice it early are usually the ones who catch the next boom, and there are some indicators to suggest we are at that moment. That brings us to the first indicator. No one is paying attention. This was a lot harder to find during the first year of Trump's second term. The mainstream media and most online commentators were locked in on the tariffs and the impact that they would have on the stock market and more broadly the economy. If you were actively trading during that period, you probably felt it. Constant swings, sudden reversals, it was whiplash, the kind of environment that feels less like investing or stock trading and more like trying to navigate choppy waters in the dark. But today, attention has shifted. Epstein, Iran, Trump's latest tweets, or truths, I should say. The market, not the main character right now. And historically, that's the kind of environment where opportunities start forming. At first, quietly. However, this is so long as the conditions are right. Which brings us to the next indicator, the dip. Markets need to breathe. They can't just go up forever, and when they do pull back, it's not a flaw, it's healthy. It reassures investors that prices aren't being driven by pure FOMO, that things aren't getting dangerously overextended. The catch? A breath doesn't always mean a quick recovery. The 1999 dot-com bubble took about 15 years for the NASDAQ to fully recover to its previous highs. The 2008 financial crisis took roughly 4 to 5 years for the S&P 500 to climb back. Quantitative tightening during Biden's term triggered a downturn in 2022 that took about a year to meaningfully recover. Even COVID, which felt kind of fast, still took around 5 months for the market to return to its previous highs. So if you're investing through a 401k or Roth or anything long-term, that doesn't really matter. Just buy the dip. Stay consistent. But if you're looking for an opportunity, something that could change your life, timing really does matter. And what you need is a dip. And ladies and gentlemen, we've got one. The Iran war dip. There's growing belief that Trump is playing aggressively around oil prices. And that uncertainty is bleeding into the broader economy. Fear has crept in. Retail traders are selling. Some institutions are taking profits, moving into cash and gold. But here's where it gets interesting. I think institutional investors are starting to recognize a pattern. And I think because of that, they're getting in early. Take a look at this chart. The war, as far as we know, is still ongoing. So why has sentiment already started to shift? Why are buyers stepping back in? Because the constant cycle of there's a ceasefire, there's no ceasefire, the war is over, the war isn't over, the Strait of Hormuz is open, it's closed, it creates confusion, psychological whiplash. Institutional investors are starting to lean back in because they've seen this before. The Trump tariffs. Every time the market dipped on fear, Trump would announce some sort of progress, a deal, a framework, talks about a meeting, and every time the market jumped. Then silence, no new information, fear crept back in. It almost felt like two competing forces, the administration pushing optimism and the media reinforcing uncertainty. Now swap tariffs for Iran and oil. Same structure, different headline. To institutional investors, this feels very familiar, and the data suggests they're buying, which brings us to positioning. If you want to benefit from a move, you have to get in early enough to ride the wave. Otherwise, you're just chasing the hype. Right now, we have a recent dip with confidence that we're not in an overheated bubble like COVID, a distracted public focused elsewhere, and early signs of institutional buy. Now look at this. This indicator is called the MACD, the moving average convergence divergence. In simple terms, it tracks momentum. And here's what matters. The ideal setup is when the blue line crosses above the yellow line, and both are above the zero line. That's when momentum shifts forward. Now look at the weekly NASDAQ chart. Every time this condition has appeared, look what follows. And more importantly, look how rare it is. This doesn't happen often, which is why some people are starting to pay attention. At least the people that generally pay attention to the market every day anyways. Because setups like this don't often come around. They definitely don't come around every day. Now to be clear, this isn't financial advice. This is just my observation and my opinion to start paying attention. It's a pattern and a possibility. So let me know what you think. Are we early to this next boom? Or does the situation in Iran spiral into something that sends us into a multi-year downturn? Leave a comment, hit the like button, and subscribe if you want more content like this. I'll see you in the next one.